This is our Forex blog for August 26, 2011, and like you saw for the last few days, the improvements we made to the FX Trend Pro are dramatic. There's significantly less false signals. Anytime you see a plus 80 or a minus 80 reading on the level, here's a plus 80, plus 80, minus 80, usually that trend's going to continue. And underneath the real-time momentum, we have, which is by the way made up of multiple statistical tools averaged together. So if 3 out of the 4 of our statistical trend tools are showing the direction and intensity is down, then you're going to have an extreme reading. If you see some tools showing slight weakness and other ones none at all or slight positive, then you're going to see a far significant less intense red bar. Underneath that, we have the intermediate time frame trend, which is a blend of multiple tools with different weights, designed to, you want to focus on trading in the direction of the real time when it matches intermediate. And hopefully the daily, weekly, and monthly, which is underneath that, also matches. So you can see pretty much the yen was weak on almost all time frames, again at 6 to 7. You want to trade those against, some of the stronger ones. Let me scroll this one over. For some reason I was backed up on it. Alright, so how would you trade today? Well, starting last night in the Asian session until about 6, you can see the dollar was weak. What was one of the stronger ones throughout that period? Well, the Swiss was quite strong until about 3 o'clock. The New Zealand, with the exception of about an hour here, didn't have incredible intensity, but most of the time frames were up. And before 1 o'clock, obviously, it looks like the pound also would have been an okay one to trade against the dollar. So basically, you're looking to buy the pound dollar, you're looking to sell the dollar Swiss, you're looking to buy the New Zealand dollar, for most of the day, especially the New Zealand, which was quite strong after 4. Let's start with the pound dollar. Up until midnight, you have a strong pound, weak dollar, or I should say, a few hours before midnight, you can see this went up from about 62.90 all the way up to 40. You have a nice narrow range pattern here that it broke out. You have about a 15-20 pip trade here. And when currencies break from underneath above the hourly, typically if they don't come back down underneath the hourly, they're going to go up. So once it broke above here, you might have went long with your stop underneath here, and it really took it quite a while to go further up, but it did, and you have the fib target of this wave to get out of that trade. You might have been long right here when it broke out at 14, and it went all the way up to about 30. So it's about a 15 pip move. Pulled back, found support. You might have got into a trade here and lost a few pips. You got in here and went up about 25-30 pips. The New Zealand was strong also, weak dollar, and you can see, by looking to buy this one, it didn't initially explode up, but you definitely didn't lose money. You just had to be patient. The New Zealand was strong, the dollar was weak, and we all saw later today, probably pretty much from 4 o'clock onward, it had incredible strength. Now, from 4 to about 9, there was or I should say 6 to 9, there was some decent strength in here. And that's why when you have two currencies that are both green, you don't want to trade them. But from 8 to 10 and 11 o'clock onward, it's pretty much a no-brainer to be buying this currency. And you can see it went from below to above the hourly. It really was kind of chopping around here. You might have got into some small losses, and then it took off and went up 70 pips. This was the next Fibonacci area, which made a great profit target. As we shown, the Swiss was quite strong, weak dollar. You want to sell the Swiss, going into midnight. You can see it had a narrow range pattern when it broke out of there. It really didn't fall that much, about 25 pips. But you certainly wouldn't have lost money selling it, because it just went down, sideways, down. And here's the previous day's low, my Fibonacci profit target, which I expected to possibly be the low of the day, and it was. Then you got a trend reversal signal here, which usually the bigger yellow ones, which are 3 to 4 hour trend reversal signals, preclude a big move in the opposite direction, usually by 30 minutes up to about a day. You never know when they're going to reverse, but they almost always reverse. And you can see also that the Swiss, which was quite strong earlier, stopped being so around 3:30. It became weak, and so you wouldn't have focused on selling that anymore. In fact, the Swiss was quite weak from 3:30 to about 8, and the New Zealand strong. So why not buy the New Zealand Swiss during that time? And again, the New Zealand became off the charts strong here at 10, and the Swiss really was one of the weakest ones, and that's why it exploded up so much. But basically, from 3 o'clock onward, you're looking to buy this one, and you had some small 25 and even 50 pip moves up here. But then when it took off, there was no stopping it. It went up 170 pips. Anytime you get these strong currencies after a pullback, usually that trend's going to continue. Notice on this pullback right here, there was really no weakness in the New Zealand. We only had just a tiny amount of strength that came in the Swiss, and it didn't affect the intermediate, the daily, the weekly trend whatsoever. So it's a pretty decent pullback right here, and you could have quite easily made 20-25 pips on that one as well. Also, later in the day, let's scroll this one forward too. Whoops, we're on the wrong day with the yen here. Sorry, I had this scroll back. I was testing some things earlier. The yen actually was quite strong today. So with the CAD being weak, you wanted to sell the CAD yen. You wouldn't have traded the New Zealand against the yen. That's probably why that one was kind of a bust earlier. CAD yen here. Weak CAD, strong yen. Pretty much straight down. As you can see, it fell 110 pips today. And whether you sold the low here when it finally broke down, you got short on this little counter trend pullback trade right here, and it took it a few hours to break down. You probably would have been out of this trade before it really broke, and then just simply sold it again right here. You don't want to be in a trade that's just kind of chopping around. If you have the chance to get out of it with 5 or 10 pips and it doesn't appear to be moving, you can get out, get back in, and this just absolutely took off and fell another 60 pips, 70 pips. You can also see, the pound. Most of the time frame trends were down. 3, this one wasn't that strong, but 4, 5, pretty much up until about 10, you could have sold the weak pound versus strong yen also. And you can see the same exact thing, just straight down. You focus, the keys to trading is small losses, bigger wins. And guess what? When you're trading the strongest trends, your odds of a big win goes up dramatically. It also increases your winning percentage because you're not trading two currencies that are both strong, which tend to chop around. Like for instance, let me prove that to you. We have a relatively strong dollar here at 7 and the yen strong. Now the yen appears stronger than the dollar, so the dollar yen should fall from 7 to 8, but it's probably not likely to fall much. Actually, it does fall a significant amount, but most of the days when they're both strong or weak together, you get this kind of choppy price action right here. And whenever you're trading two that are both strong, sometimes the one that's stronger than the other one, which causes this big move, all of a sudden loses its strength, and the one that was strong before can cause this big spike up. So your risk, also not only is you have the high chance of choppy trading. Look at the Swiss weak most of the day, and so was the CAD. CAD Swiss probably was quite choppy until later in the day when the Swiss became super weak. Look at how choppy it was, up and down in a 25 pip move. Now that's not quite that bad. You probably could have even made money on this, but a lot of times they're in a 10 to 15 pip range for hours, up, down, up, down. You can see this one shot up when the Swiss became the weakest one, and the CAD got some strength here at 10. So what do you do if you're trading at 10 and you miss the initial spike up? How do you get into this trade? It's very hard to do on a 5-minute bar. I'm going to end today's class showing our range bars. I like to put the ATR function on here. This shows you how much it normally moves on a 5-minute bar. If you like 5-minute bars and you want to trade range bars, probably an 8 pip per bar chart is a decent one for this slightly higher volatility pair. You put 8R on the chart, hit enter, and after that spiked up there at 10, you probably, maybe weren't even watching this one at first. Most people don't trade the CAD Swiss, but if it happens to be one of the best pairs to trade, you're going to find some good trades on it. At the 10 o'clock time, when that currency took off, you might not have even got into this trade, or you might not even started to watch it until it started going up a little bit. So you usually want some kind of a sideways consolidation or a pullback, and you kind of have it right here. You have a nice, beautiful rectangle pattern, and it's usually before range bar charts, it's kind of risky buying the high of a move, but this is beginning this at 10:20, and you can see for 10 minutes it's in this nice little choppy mood, range, going up 8 pips, down 8, 8, 8, 8, up. When it breaks out, pretty high probability, and it immediately goes 25 pips your way. You're in one of the strongest currencies. Move your stop up. It goes sideways. Move your stop up, and you can just simply on these super strong trends, draw your trend lines underneath the lows and just kind of stay in it. You might not even get out on this bar. You might just yank your stop up underneath there. A lot of times they go sideways for a while and go up another 30 or 50 pips. As you can see, that's what happened. This is probably, it looks like the end of the move here. I probably would get out of at least half of the trade there, and if you're going to give it a little bit more room to run, you leave your stop there, but you're going to get stopped out, it appears. And there you go. But even though you missed the first burst, you still caught 125 pips or so as this thing continued. Amazing trade, and telegraphed even before 10:30 with our software. You can see this got extremely weak right here at 9:55. There's another weak bar at 10:15. This one showed its first extreme strength at 10:15. So you literally had 15 minutes to pull this chart up, go to the restroom if you need, cook breakfast, make coffee, come back, and still not miss that trade. Because it really didn't give you a safe entry signal, what I would consider an entry that I would want to take until about 10:30. So you had a 15-minute window to pull up the chart and goof off for 15 minutes before the trade actually happened. And aggressive traders really might have bought this, 3 or 4 bar pullback. The first bar goes green, you're long with your stop right here. You'd have a tighter stop that way. It took about 8 minutes, and then it broke out, and you would have been into this another 20 pips earlier.